On this video, we're going to explore Zillow's top 10 hottest markets for 2025, as well as which markets are expected to do the worst. And stay to the end because I'll explain what all of this means if you're a real estate investor. Now, one thing is certain in 2025, the biggest factors affecting market growth are affordability, mortgage rates, and obviously lack of supply. Long gone are the double-digit appreciation days like we saw in 2021 and 2022. Such rapid growth put many markets out of reach for most buyers, making more affordable markets high in demand. Now, affordability is a major factor why Zillow expects Buffalo, New York to be the nation's hottest housing market again in 2025 for the second year in a row. Now, this makes Buffalo the first market ever to hold the title for 2 consecutive years. And it's no wonder the median sale price in Buffalo is only $215,000 compared to almost $430,000 for the nation as a whole per Redfin data. Now, even though newly elected President Trump vows to lower interest rates, we can expect mortgage rates will be in for a roller coaster in 2025. Strong employment and a robust labor market, as well as lowering inflation remaining a top priority for the Federal Reserve, this will ease pressure from the feds to cut rates. And as we've seen, higher rates will continue to strain affordability and cause sellers to lower prices in order to attract hard-pressed buyers. As a result, 2025 nationwide is expected to have very little appreciation year over year from 2024, even in the hottest markets. The only metro market in Zillow's top 5 hottest markets in 2025 that is expecting growth and appreciation is number 2, Indianapolis, which is predicted to only increase slightly from 2.8% annual appreciation in 2024 to 3.4% in 2025. Even Buffalo, which has experienced a strong appreciation of 5.8% in 2024, is expected to drop to only 2.8% growth in 2025. Now, the other factors to pay attention to in 2025 are inventory, or the number of homes for sale, and velocity, or the speed at which those homes sell. The top 3 markets in 2024 that had the fewest listings and the shortest days on market were Hartford, Cincinnati, and Columbus. Those 3 markets were the top 3 in 2023 for inventory and velocity and are again expected to be in the top 3 in 2025. Now, another driving force that will impact the housing market in 2025 is demographics. The 2 largest buyers are baby boomers and millennials, and both are very active in the housing market. Unlike previously predicted, baby boomers are not exiting the market as they get older, and millennials are in the prime buying years as they hit their mid-30s. So let's take a look at Zillow's list of the hottest markets. Zillow based their analysis by looking at 4 primary factors. 1, recent market velocity, which again is how fast homes sell. 2, projected changes in the labor market. New jobs often means new residents, which raises competition and drives up prices unless builders can match the additional demand. Number 3 is new home construction activity. The top-ranked metros on Zillow's list have seen relatively low levels of new home construction, resulting in job growth outpacing new supply. Think about it. New homes that keeps pace with an area's growth remains a crucial piece of keeping homes available and accessible. Now, in Buffalo, for example, competition among buyers will remain hot, with employment growing far faster than builders are adding new homes. And the 4th indicator Zillow looks at to determine market growth is the overall number of homeowner households. And like I said, Zillow picks Buffalo to be number 1 again in 2025, largely because Buffalo has the most new jobs relative to new homes being built. And let's not forget, Buffalo is extremely affordable. Like I said, the median sale price is $215,000, which is half the national median sale price. And it seems Buffalo is doing a pretty good job on amenities with major hubs for transportation, a large sports franchise, and a growing downtown, making it a desirable city for relocation. Number 2 on Zillow's 2025 hottest market predictions is Indianapolis. And like I mentioned, Indianapolis is expecting higher appreciation this year compared to 2024. Numbers 3, 4, and 5 are directly related to affordability from neighboring expensive markets. As an alternative to overpriced New York City and Boston, nearby more affordable markets, Providence, Hartford, and Philadelphia, rank 3rd, 4th, and 5th on Zillow's top 10. Numbers 6 through 10 are St. Louis, Charlotte, Kansas City, Richmond, Virginia, and Salt Lake City. Now, rising fastest in the ranks from 2024's hottest markets list is Virginia Beach, which leapt over 23 markets to the number 13 spot this year, driven primarily by job growth that has far outpaced new home permits. Now, meanwhile, Memphis fell the farthest by the same token, dropping 30 places as new home permitting has exceeded low job growth. Now, of all the markets studied by Zillow, the coolest metros of 2025, and when I say cool, I don't mean like cool, I mean like not cool. In last place is New Orleans, where Zillow expects the home values to drop by 3.8% in 2025. Now, the other four slowest growth markets are San Francisco, San Jose, Portland, and Austin. These markets are characterized by weak demographic and job market pressures relative to the housing market and flat or falling home value projections. Okay, so what does this all mean for real estate investors? I have two perspectives. First is the majority of real estate investors are local. What I mean by that is most investors buy, sell, and invest in their local market that they know and understand. Now, if that's you, or if you're a wholesaler or an agent that services local investors, then you need to adjust and operate within the market environment you're given. When the local market is hot, local investors are more aggressive, and when the market is cold, local investors are more conservative. For example, if you're an investor in Buffalo, you could probably be a little more aggressive, and if you're an investor in New Orleans, you should probably be a little more conservative. Understand what your market trends are doing and adjust accordingly. Now, if you're a wholesaler, what's actually happening is less relevant than the perception of what's happening. Talk to a lot of cash buyers to learn their sentiment about the market and how they are adjusting their buy criteria. Then do the same. A wholesaler's job is to follow the adjustments their cash buyers make and then bring them inventory that fits their criteria. The second perspective I have about Zillow's top 10 markets is that some investors follow the opportunities. I call this follow the money. Now, in 2025, it's possible to invest remotely, or what we often call virtually. You can live in Phoenix, Arizona and invest in Indianapolis. Heck, you can live in Poland and invest in Indianapolis. That means some remote investors will follow the hot markets. Learning how to wholesale or flip houses virtually is a strategy that I've been successfully doing since 2013, and I put together a free kit which shows you everything you need to do to make money from your kitchen table, or anywhere for that matter, without ever seeing the houses in person. In fact, most of the real estate deals I do today, I've never actually seen the properties. Now, I'll give you this entire kit for free. To get the download, just go to virtualflipperkit.com. Now, speaking of remote investing, I'm always looking for good deals that I can flip for profit. I have capital and systems in place to flip houses anywhere in the country. I just need more deals, so I created a finder program where I'll pay you $10,000 for every deal you bring that fits my criteria. If that sounds exciting, then watch this next video where I go into detail about how to get paid $10,000 for finding deals for me. Watch that now, and I'll see you on the next video.